And here joining market calls and welcome everyone to introduction to order flow. This is a part 2 of the crash course over here. In today's discussion, we're going to discuss about the very basics of order flow principles, some of the very basic principles that we're going to learn. Of course, the order flow principles are very vast in nature. Almost 15 principles are there in order flow. But among that, we will try to cover some of the most important principles, particularly if you're a beginner in order flow and you want to know the principles and some of the strategies around the principles also we're going to discuss in this session. So I hope my audio and video quality is good enough to kickstart. If you simply type yes so that I can quickly kickstart with the session without any further delay. Alright, Bhaskar says yes. Raj says clear. Alright, great. Alright then. And Kajendra says yes. So there is a small correction in the previous session. I said like for order flow charts, I said like 1 minute data is what required. Of course, for order flow charts, you need a tick level data. That is a small correction in the previous session. Otherwise, we are good to go with the session in today's case. So some of the most important order flow principles are like initiative, drive, absorption, and consolidation. So first of all, we'll try to understand what is an initiative drive, what is an absorption, and what is a consolidation. In the last series, we discussed about aggressive traders, right? Aggressive traders are the one who move the markets. And passive traders are the one who control the velocity of the markets. This is what we had seen in the last weekend. We discussed about the basics of order flow and order flow terminologies. In that session, we discussed about it. Now, if you ask me what is an initiative drive and what is absorption, why a beginner has to learn this first? If you ask me, I would say like initiative drive is mostly driven by institutional liquidity with heavy volumes typically. So whenever the institutional volume is happening, when they are looking for liquidity, when they are looking for a place to conduct an auction where more liquidity is happening, an initiative drive happens with a strong volume, strong price action. That is a theme behind the initiative drive is all about. But absorption is the place where the smart money find they will start controlling in the form of a passive way. In case of initiative drive, it is controlled by whom? It is controlled by the aggressive players. Absorption is mostly controlled by the passive traders. And consolidation is neither smart money, neither the players from the institutional aggressive orders. So it is more of a low volume. Typically low volume bars is what we call as a consolidation bars. Let's try to see some of the examples on initiative drive. Talking about initiative drive, if you see in this case, you'll be seeing a strong directional delta will be there. The delta will be kind of a bigger delta. Maybe I'll show you from this example. In this example, if you could see, we have particularly a very big delta candles is what we've been seeing over here. So bigger delta, almost delta, if you could see in this bar is 1635 in this particular bar. So whenever the delta is getting bigger, usually it's an indication that it is more of an initiative drive. Delta will be bigger, volume will be bigger, right? So delta, volume, and single price also sometimes will be seeing bigger. In this candle, you can see that the one of the volume is 879, 656. So very big single price volume is getting traded on both the sides. Buy side also getting traded, sometimes sell side also getting traded over here. So that again, that is an indication that we've been dealing with the initiative auction. So high density volume will be there, big delta will be there. Sometimes even the high volatility bars will be there. The length of the bars will be very high. High volume will be there. And in some cases, even you'll be seeing a one time framing also. So these are the signatures of the initiative drive. You'll be seeing momentum also. In some cases, you'll be seeing stacked momentum or momentum bars. Now talking about absorption Absorption also happens with the big volume activity, but then despite the aggressive activity, market will fail to continue in the same direction. Big volume will be showing up, but then market will start falling from there. Or big down volume will be there, but still market will start reversing from there. So usually trend reversals are very common near the absorption pattern. Right? So absorption is nothing but what? A passive way of controlling the price action. Maybe I'll try to explain this with a whiteboard session over here. So many people might have a basic confusion about what is initiative drive, what is absorption, how I can identify the absorption. So I'll try to explain this with the whiteboard. I'm going to pull up a whiteboard here. We quickly get a whiteboard. So let's say initiative drive. In case of initiative drive, what happens is like price will be moving in directional fashion, but with strong volumes. At many places, the strong volumes would have been placed. Many locations. Strong directional volumes will be there. Many trending days has a initiative drive. So big volume flow. Big volume flow will be there. Big volume flow. Which is characterized by what? We'll be having a big delta. Big volume. Or we'll be seeing a stacked momentum. Stacked momentum. Or we'll be having something like a big single price volume. An example could be something like this. Maybe let's say I'll try to give an example here. Let's say I'm having a momentum bar, high length, high volatility bar. You know, right, order flow on the right hand side, I'll be having a buy market order, and left hand side, I'll be having a sell market order. Imagine one thing is like always the big volume will be there. So 580 plus lots. Anything more than 450 lots, I'm talking about in terms of lot size, will be considered as a bigger single price volume for something like Nifty and Bank Nifty. Let's say 580 is there, 600 is there, and maybe 750 is there. So when such kind of big transactions are happening, in a very thick transactions are happening, that's an indication that probably initiative drive is there. That alone, it is not important. Let's say delta of that bar is more than 750. Imagine delta is equal to positive 1600 lots. That's a more of a big delta. Big delta. Let's say the volume in that particular bar. Imagine the volume in that particular bar is again more than 2500 lots. Imagine 3600 lots got traded in that bar. This is more of a big volume. And probably at times length of the bar will be very bigger, maybe 40 points of length in a 5-minute time frame. So that is big volatility. Big volatility. And at times even we'll be seeing a stack momentum also. So my stack momentum will be something like if I compare diagonally, last time we discussed, right, we have to compare diagonally. Let's say if I try to compare diagonally, it is like at least 5 times bigger. So if I compare diagonally, you can see high volatility bars, I'll be able to see that. So, I mean high momentum bar, these 3 bars are momentum bars. Kind of we call it as a stacked momentum. Stacked momentum. 3 consecutive momentum blocks on the buy side is what put together we'll call it as a stacked momentum bars. Right, so this is bar 1 and bar 2 and bar 3. 3 bars consecutively, it is more than 5 times. Sometimes it could be even about 10 times also. Such kind of bars is what we call as a momentum bars. So momentum bars are one scenario. High density volume. So we are also having a high density volume also. So we also have a high density volume. High density volume. When I'm having a high density volume, that is also an indication that I'm seeing an initiative drive. And price keeps on moving in a directional fashion. That is how the initiative drive will look like. That is how the initiative drive looks like. Okay, how about absorption? How we can differentiate absorption? An absorption will be very easy to differentiate. Imagine I'm seeing an uptrending price action. An uptrending price action is what I'm seeing over here. An uptrending price action is turning down. Whenever it is turning down, or it just top out with a big volume. So we'll be seeing a big volume activity. Big volume activity at the high of the day or something like that. We'll be seeing a very big activity. For example, imagine the market is keep moving higher, and you are seeing a very big volume activity in this particular bucket. One of the 5-minute candle. Imagine I'm having a 5-minute candle over here. One of the 5-minute candle is having some 580 lots. So despite big buyer is there, this is buy side, right? Buy side and then sell side. So we are having a very big very big volume is getting transacted at one of the price levels. But despite the price inching up higher, the low of the bar is getting broken immediately. If the low of the bar is getting broken, or if the next bar is an inside bar, the inside bar low is getting broken, then we call this zone as an absorption bar. This is more of an absorption bar. Right, so price moves to a peak. So this is the peak of the bar. This is the peak of the day, or something like fresh day high, peak of the day. So it forms a peak of the day with big buying activity. Despite the big buying activity, price started going down, breaking the recent lows. And that is an indication of an absorption. So who is getting absorbed over here? If you ask me, the buyers are getting absorbed. 580 buyers. The 580 is nothing but the buyers. They are getting absorbed. Who is absorbing? If you ask me, the opposite side. So 580 sellers. For every buyer, there will be a seller, right? 580 is a buyer who is absorbed. And 580, the sellers are nothing but the limit order sellers. And they are the one who is absorbing the buyers. Absorbing the buyers. Now in this case, this zone will be acting like a kind of a resistance band. So this bar will be acting like a kind of a resistance. Are you clear about what is absorption and what is initiative drive? Initiative drive is more of a directional fashion. Absorption is more of a trend reversal. Both the cases, volume will be at the highest. Alright. If you have any questions on this, let me answer immediately. If you are clear, please type clear so that I'll get a fair idea that you guys are able to understand the concept of initiative drive and absorption. Vishal is asking, can we say ID initiative drive is same as absorption? Absolutely not. Initiative drive and absorption are two different things. Initiative drive brings a strong directional price action. Absorption will bring a trend reversal opportunities. Okay, both are not same, but both will have bigger volumes. Both might look similar, but they are different. So Venkatesh Murthy is asking in which color it highlights. So obviously, in uptrending price action, it will be highlighted in green color. In a downtrending market, the absorption will be highlighted in a red color only. So can we say bears will take control from here? Obviously, if it is going to be a trapped, something like a trapped activity, sometimes big traders, they get into a trap. Mostly it will be trapped by the absorption players. So when there is an absorption, yes, in an uptrending market, if you are seeing an absorption, usually it will lead to a trend reversal on the downside. Whereas if you are seeing a downtrending markets, it is ending with an absorption. Something like we are seeing a downtrending markets, and I am seeing an absorption around this level. I will be seeing a trend reversal. So you'll be seeing high volume at the day low. Extraordinary volumes will be traded at the day low, and still despite the big volume, we'll be seeing a complete trend reversal. Big volume activity again. So Vishal is also asking, when we say initiative drive, are we talking about opening candle of the new day? See, initiative drive can happen anywhere. It can happen at the opening of the day. It can happen during middle of the day. It can happen at the end of the day also, right? If you would have seen last couple of days back, we had seen a strong collapse in the market, second half, 20th December, if I'm not wrong. Almost 500 point intraday crash, which is nothing but what? Initiative drive. All right. That's a classical example for an initiative drive. Maybe once we're done with the basics, I'll show you the 20th December activity, how the initiative drive happened and what kind of delta got into the play. So Lakshmesh is asking a question. So in this case of initiative drive, the close of each bar will be up and absorption it start closing below of the previous candle. Absolutely, yes. You are right, Mr. Lakshmesh. All right, getting back to the topic here. So the consolidation will be looking something like this. We will be having volumes less than 450 lots in Nifty also, Bank Nifty also. So these are considered as a lightweight volumes. Now how these volumes are decided? These volumes are decided based on a concept called relative volumes. Right? I don't want to go deeper into the relative volume because it's going to take a lot of time. At this point of time, you remember that any volumes in Nifty or Bank Nifty on a 5-minute time frame with a volume less than 450 lots will be considered as a low volume activity. Now there are times what happens is like during the middle of the day, we will be experiencing low volume price actions. Low volume price action, no big volume will be there. Moderate volume or typically lesser volumes. Volume will be less than 1000 lots of the given bar. So those kind of places, thin volume activity happens. Typically, it results in a sideways consolidated price action. Typically, price will be keep on rotating, means it will be keep on making a low or lackluster, low volume and lower delta trading is what generally it happens. Typically result in a consolidation. Dull, boring price action is what mostly happens around those levels. So that is with consolidation. Now, when it comes to initiative drive, how we can identify the initiative drive is like it is more of an impulsive drive in an attempt to find liquidity. As I said, generally institutions drive the price action aggressively to find the liquidity where they can find more buyers or more sellers, so they can conduct large amount of business. It is more of a fast trendier move, right? And it is characterized by high volume, high volatility, high tempo, which means a fast moving markets. Initiative drive always comes with the fast moving markets. Likewise, kind of an this is again an example where you can see there are two things which can determine where the initiative drive is happening. So if you see in this example, I'm seeing a big volume activity, right? Another one is like I'm seeing a series of momentum I'm seeing over here. So if I cross compare, the buy side is 10 times more bigger. So that is how it is shaded with the green color blocks. So these are momentum blocks or stacked momentum blocks if it is more than 3 blocks if I'm having. These are momentum blocks. Momentum blocks. And that is a sign of an initiative drive, which is what we call as a stacked momentum. It is also one form of an auction imbalance. Imbalance indicates trendiness in the markets. Trendiness. More the market is in trendiness, it shows like markets are showing imbalance. That's the terminology we'll be using in market profile also, in order flow also. And at times we'll be seeing a stacked sellers. So in this example, if you would have seen, we are seeing a couple of zero zones in between. If I ignore the zero zones, I'll be seeing 1, 2, 3, four consecutive selling pressure is what I'll be able to see on the sell side. So that becomes a four block of stacked momentum on the sell side. Again, a big seller is over here. Again, one more big seller is around 462. So these are some big sellers are playing in this particular bar. Stack momentum is there with the embedded zeros. That is also one form of a momentum activity. That is also one form of an initiative drive. When it comes to absorption, it is a passive way of accumulation or distribution. Typically, it will not be having a fast price action. It will be having a slow price action, but still with high volumes. Usually, smart money reloading happens in the form of limit orders. Now, what smart money will be doing is, I'll try to explain this absorption in a simple example. Smart money, imagine they are floating a liquidity in this band. Imagine like a river, it's continuously keep on flowing limit orders. Or we call it as a supply area. Supply area is what? The sellers has been active around this area. So where continuous flow of sell limit order will be keep on flowing around those levels. Now usually what happens is like when the price is hitting the liquidity zone, so let's call this as a liquidity zone where more limit orders are floated around those levels. We call it as a liquidity zone. Okay. Usually the price will find a resistance around those levels because more the liquidity is there, it will be very difficult to cross the zone. So every time the price is coming and hitting those levels, more and more reloading happens. Reloading means once that liquidity is over, again they will float more liquidity into that band. They will inject more liquidity. The smart traders will be doing something called reloading. They will again and again they will try to send more orders at the same zone. They will be keep on sending those orders. So price will be trying to find a resistance, and at some point in time they will give away. So hence this liquidity zone will be acting like a kind of a ceiling effect. It's called as a what? Ceiling effect. So every time the buyers are getting into the zone, it will result in a big volumes. It will result in big volumes, and every time we are seeing a big volume, we will be seeing the trend reversal. So typically what we'll be seeing here, price enters into the band and it goes down. Again, price enters into the band, it goes down. Price enters into the band, it goes down. Price action will be very slow only, but still price will fail to or struggle to cross this zone. Now such kind of zone is what we call as an absorption zone. Absorption. So that is how the absorption is different from the initiative drive. Still volumes will be at the high, we'll be seeing in high volumes around those levels. High volumes. Alright. Anyways, coming back to the topic, I'm sure now you have a pretty good understanding about absorption. Absorption is also called as a responsive auction, another name to that. So here is the classical example for an absorption. Think about this example. Now in this example, the price is keep inching up higher. If you could see in this example, price kept on going up higher. Now look at this price action. The volume was like 579 lots. 579 lots on the buy side it got traded. Big buyer, right? But what happened is like despite the big buyer, the next bar we had a inside bar. We had a inside. So if for an absorption to get confirmed, same bar I cannot confirm the absorption. We need the bar, just plot a line around the bar high and bar low. Bar high should not be taken out and bar low should be taken down. If the bar low is also not taken down, bar high is also not taken down, what does it mean? We have to wait for the subsequent bar low to be taken out. So the next bar is an inside bar. So inside bar low is what I'm taking up. That inside bar low is breaking down. The break of the inside bar low confirms that this particular bar is more of an absorption bar. So we can conclude that as an absorption bar. Typically, we can use this, or we can call this as a, conclusively we can call that as an absorption band. Alright. So in this case, I'll be calling this as a absorption bar. So absorption of buyers or sellers are observing the buyers. Here in this case, the sellers are the one who is sending a limit order. They are observing aggressive buyers. Observing aggressive means market buy orders has been absorbed. Market buy orders. All right. Anvay is asking about what is CR. I think the CR and all we had discussed. It's called COT ratio. We had discussed in the previous session. We discussed about it. So I kindly request you to watch the part 1 series where we discussed about COT ratio. Venkatesh Murthy is having a question. Venkatesh Murthy is asking to take some recent example. Definitely I'm going to take the recent example. So once let me done with the presentation, I'll show you the recent setup and recent example so that you'll get a fair idea what happened in the last couple of days. Where the trading opportunity happened, everything will be explaining in the recent session. All right. Anup Dixit is asking a very interesting question. Why not this particular bar, 1210 bar is not considered as a exhaustion bar? So probably these are the doubts many beginners will be getting in. Let me try to clarify it. See, 1210 bar, why I am not calling it as a absorption? Here also big volume is getting traded, right? So here big price action is getting traded. So what is happening next is what it decides the absorption bar. So whenever a big volume is getting traded, that too at a fresh high, what I will do is like I will mark the high and I will be marking the low. What is happening? Next bar is an inside bar. See that next bar haven't broken the high also. It haven't broken the low also. Now subsequent bar, what had happened? It broken the high. So for an absorption bar to qualify, it should break the low of the bar or it should break the inside bar. The inside bar haven't broken at all. This haven't happened at all. So it doesn't qualify for an absorption bar. But whereas in the subsequent example, which is nothing but the 1220 bar, we had the same rule. I just refer the high and refer the low of the bar. Next bar becomes an inside bar. High is not taken out. Low is also not taken out, but the inside bar low, let's say this is my inside bar low. I call that as L1. Okay, the L1 got broken in the subsequent candle. The moment price is crossing and becomes an the 1230 bar is what breaking the low of the inside bar, and that clarifies that it is an absorption bar. I'm sure now you have a fair idea which bar is an absorption bar and which bar is not an absorption bar. All right, so absorption bar we cannot identify in the same candle itself. An absorption bar requires a follow through on the downside. Such kind of bars are easy to identify. Once the breakout is happening, the previous bar will be considered as an absorption bar. So here where the absorption bar is getting confirmed, this is the absorption bar. It is confirmed by breaking one of the very recent lows without breaking the high. The high should never get broken and the low should be broken. The low is getting broken at 1230 candle. So hence this bar will become an absorption bar. I guess that explains. Anup is asking where to watch the previous videos. I think the previous video you can watch it from the Bell TPO library. It's already posted in the Bell TPO library. So Vishal is also asking a question. If there is 300 volume buyers and 300 volume seller below, which way exchange will go first? And once exchange moves in one direction, it will not come back to the previous 300 orders it left behind. It means can exchange decides it want to be bullish on a particular day. So Vishal is asking a question, if there is a 300 volume buyer and 300 volume seller below, which way exchange will go first? I don't think we should be looking from that angle, right? See, buyers and sellers will be keep on coming in and they'll be keep on moving up and down. The question here is when the big volume is happening, when the big delta is happening, post that what is happening? Is it continuing? Is it immediately breaking down? Based on that only we have to decide what will happen next. Big volume will be always happening at random locations. Big volume will happen at day high also, it will happen, day low also it can happen. Big buyer will happen at the day high also, big seller also will come at day high many a times. So, but there will be certain patterns is what we'll be looking into that. Now, many beginners, what they will do, they will look into the big buyer activity, so then they will try to buy. Some people, they will look into the big selling activity and they will try to sell. Without knowledge of initiative drive or absorption, if you are trying to do, then you may end up getting trapped many at times. Alright, so basically when you are looking into the order flow, first thing you have to understand the principles properly. Number two, you have to get to know the context properly. Only if you know the principles properly, then only you can understand the context, what is happening, whether the market will reverse from here or not, why it will reverse. Otherwise, if you are just going to bet on the numbers, you're just going to simply look into the big buyer and then you're going to bet on the big numbers. That is how order flow will not work. Okay, probably if you are watching the order flow 1 or 2, 3 days itself, you'll get to know that watching the numbers doesn't matter. Where to watch the numbers is what it really matters, right? Alright, so here comes a very interesting strategy. It is called as a trapped buyer. I'll also show you some lively examples how this trapped buyer happened in Nifty, in Bank Nifty. I'll show some recent examples also. In fact, these are the things which we had discussed lively in our session itself. One of our live sessions, we used to conduct a live mentorship program on market profile and order flow. Almost 45 days of live training sessions we'll tend to cover. So I'll show you the examples what we discussed in one of our live sessions. So the trapped buyer is one form of a trade setup. Basically, big traders, they typically get into a trap at the day high. So here, this is a classical example, what it happened over here. In case of a trapped buyer, price will be keep going higher and we'll be having a absorption bar. So how do I know it's an absorption bar? You'll be having a bar with high volumes. Big volume is there on the buy side, right? But despite the big volume, what is happening? The next bar low is immediately getting broken down. So this becomes what? This becomes a absorption bar, right? This becomes absorption bar, right? This becomes an absorption bar, and this level, this trader entry point will be considered as a trapped buyer. So this is what it will be considered as a trapped buyer. In such kind of case, we can expect a trend reversal. We can expect a complete trend reversal. Maybe towards the VWAP, we can use VWAP as a potential target destination. Maybe I'll try to show some examples in Nifty and also in Bank Nifty, which happened recently. Maybe before to that, we'll try to understand what is a trapped buyer, what is a trapped seller. See, trapped traders are usually a sign of an emotional trading activity. So they are the last trader to get into the short-term swing. Usually they are short-term market participants. Usually happens with the heavy volume imbalance of the day high. Usually will be measuring at the fresh day high or at the fresh day low. It's a poor way of facilitating the trade. Price usually revisit those levels intraday. But the end result is an responsive activity, means it is more of an absorption activity. And one form of a short-term exhaustion. This is how the market tend to exhaust at times. So market will tend to market will tend to reverse from there. The buyers keep on buying and buying and buying, and when the trapped buyer is there, the buyers stop buying and we'll be start seeing a mini trend in the markets on the downside. So maybe I'll show you the examples from Nifty and Bank Nifty recently. I mean, last 2-3 days, what are the examples that I had seen? Maybe I could have some terminologies also I could have noted down. You see this case, we are seeing a exhaustion bar followed by an absorption bar. So this happened on last Friday. This is how the market top has been happened. It is more of an absorption bar. Let me tell you first of all, how do I tag this as an absorption bar? I tag this as an absorption bar. So this is slightly a different concept. This is not a trapped buyer. Let me tell you, this is not a trapped buyer concept. This is more of an absorption bar concept. An absorption bar will be happening something like this. So look at this example here. Here I'm seeing a 350 lots, right? I'm seeing 351 lots, 304 lots, 386 lots, 389 lots. So if I try to draw as a table, on one side, my volume activity is kind of highly dense volume activity. It's not a so big volume, or I would say like, but constant flow of decent volume with a decent liquidity. It's like somehow it is not updating here. Maybe I'll try to erase the drawing, but I can spot it from here. 351 is there, 304 is there, 386 is there, 389 is there, and the bar low is taken down, right? So that is an indication that this block is more of a absorption. This block is totally because of a absorption, right? But this is not a trapped buyer or a trapped seller. Maybe we'll go a little bit back and then we'll see, are we getting any trapped buyer or a trapped seller? Because that is what market does mostly. Majority of the places you'll be able to find a trapped buyer or a trapped seller. Let me quickly shift it back. When last Friday we had a low formation. There are two lows it got formed over here. This is one of the low where it had formed. Look at that. This is market was hitting a fresh day low. Notice this bar, the bar at 1240 bar. Are you able to see that bar? That bar high and bar low, I'm just marking it as a reference, right? The bar 1240 bar is what typically we called as a what? We will be calling it as a absorption bar. It is also a trapped seller. Trapped seller. So why I'm calling this as a trapped seller? Because market was hitting a fresh day low. Market is hitting a fresh day low. And immediately the bar 1245 bar is breaking the high of the candle. Notice this horizontal line which I am drawing. That horizontal line is getting crossed immediately. So that way this 1240 bar will be considered as an absorption bar. Who is getting absorbed here? Seller activity is getting absorbed. Seller activity is getting absorbed. Alright. So which is followed by what usually provides a scalping opportunity. Very quick scalping opportunity the market will provide. So general question is like where I should keep my stop loss. Usually the stop loss is expected to keep just one brick down below the low of the bar. So tighter stop loss is what we prefer to keep. So usually the entry point, mostly the 20 to 25 points is what generally will be getting a stop loss around in a highly volatile situation. In a low volatile situation, the stop loss can go as low as like 10 points or 15 points. Some rare cases, it can even go to 7 point stop loss also. Now, many traders, what they will do, they will wait for the price to cross. After crossing, if I'm going to enter immediately over here, right? If I'm trying to enter at this level, I have to keep a stop loss of this is the stop loss I have to keep. This is the SL I have to consider keeping it. Somehow it's not writing anything. But in this case, the stop loss will be as good as like how many points? Almost 75 to 45. It is like 30 points. 30 point is the stop in this case, right? So 30 points will be the stop loss. But if I wait for the price to dip, if I'm trying to buy on the dip, I can reduce my stop loss to something like 20 or 25 points. I'll be able to reduce it. So usually price after crossing, wait for some sort of a dip and try to enter into that dip. Thereby you'll be able to further refine your stop loss level. You can able to have a controlled stop loss. Very tight stop loss is possible in such kind of cases. Now, what kind of target if you can target? If you ask me, something like Nifty, you can look for a 25 to 30 points if in a low volatile markets. Maybe 30 to 40 points you can target in a highly volatile markets. That's a bare minimum one can target for a such kind of a setup. All right. Now, this is one thing where it happened is like how many points it had done. It had done some decent upside. So the upside it went like in a very next 10 minutes or so, the price had reached a high of how many points? So the entry itself happened around 21,375 and the target was hitting around 21,425 levels. That's the kind of level that we've been almost 21,420 plus is what we are seeing over here, which is roughly how many points? Almost 55 points of opportunity, right? Decent trading opportunity in a very, very shorter time frame perspective, right? And one more buying opportunity happened. Let me show you. I think around 1:30 or 2 o'clock we had this. Price has been keep on crashing down. You see this, the way the price is crashing down. This is how the initiative drive will look like. You're able to see the, let me remove the lines so that you will not get confused. I want you to focus on the bars around 140, 145, 149 and 155. Price has been continuously and constantly keep on falling down. Look at the stacked momentum, continuous momentum is happening on the sell side. Here also a lot of momentum bars are happening on the sell side. Big volume is there, big delta is there. 145, that is 1345 bar is having a big negative delta. Again a negative delta and one more negative delta over here. Big volume, 782 volumes is getting happening over here. So these are strong price action. Price is one time framing down with the strong volumes and strong deltas. So these are classical indication of initiative drives. Alright, so how the price action has been bottomed out. Notice this 1355 bar. 1355 bar, what is happening? We had a very big volume. So listen carefully, this is the most important one. I'm mapping the high of the bar, I'm also mapping the low of my bar, right? So obviously my low of my bar will be my entry, stop loss levels. My entry will be when the high of the bar, if it is immediately breaking out, that is going to be my entry. Here immediately it is not breaking. Next bar is having an inside bar. So the inside bar high is what I'm just keeping over here. So notice that 2 o'clock bar, that is 1400. It becomes an inside bar. The low is not taken out. Low should not taken out at all. It becomes an inside bar. High also not taken out. Previous bar high is also not taken out. Becomes an inside bar. So the inside bar high becomes my new entry point. And that entry is taken out. That becomes my entry point over here. Typically, I'll be looking for another how many points? 25 to 30 points. So if my entry is at 21,335, imagine adding up another 30 points. So 21,360 will be my potential target. 21,360 will be my potential target. So what we got over here is another absorption activity at 2 o'clock bar. We are having it. So that's gonna be the trapped seller again, trapped seller. So this is how the price action happened in case of last Friday's price action. Reasonable trading activity which happened over here. All right. Now let me show you the last 20th December activity, because 20th December is how the strong price action happened. huge selling pressure is what it is happening. A strong liquidation happened. This haven't happened with an trapped buyer. Instead, it happened something with an ultra thin volume activity. That's a different type of reversal we got. In fact, morning also we talked about some sort of an stack momentum. If that is breaking down, maybe some strong liquidation could be a possibility. That's one of the talk we had on the day of 20th December. But what happened here is a strong initiative drive is what it happened. Maybe I'll try to remove all the lines here because a lot of lines are there. It might be disturbing. First, let me remove all the lines here. All I want you to focus on the volume activity which happened post 1 o'clock. So post 1 o'clock, we are seeing a huge liquidation in the bars. Volume is significantly at the highest. So focus on the volume here. Focus on the volume and focus on the delta. And have to see how price is one time framing. So notice that this is where initially it started with light volume on the downside. But all of a sudden we had seen a very big delta. So maybe I'll zoom in and then I'll show you. All of a sudden, what is the delta value here? The delta value is minus 938. Minus 938 over here, big delta. Volume is reasonable volume only. But subsequent volume is getting like 2480. Volume is getting up bigger. And the subsequent volume, huge delta again, 1398. Volume is accelerating here, 30,030. So increased acceleration in volume. Price is also accelerating on the downside. Big delta, big volume. So all these things put together, this is how the initiative drive happens. When the initiative drive is happening, you can feel it, right? Particularly when you are trading in that direction, profit will be coming faster. When you are trading against the direction, the losses will be also equally faster, right? So initiative drive usually brings a strong trending momentum price action with strong volume. Look at the volumes over here. This particular volume at 330 candle, the volume is even more serious. 9,000 lots is getting traded. Imagine 9,000 lots which is getting trading on a 5-minute candle, right? And look at the delta here, 2,154 delta. Strong selling pressure is what it is happening. And followed by that, another strong selling pressure. One more big delta is happening. Look at the momentum on the left hand side. Strong selling momentum is happening. Delta is minus 1468. And the 8904 is what we've been seeing over here. And after that, some sort of consolidation. And again, once again, market started breaking down. Once again, market started breaking down with a big delta. Look at that. At 2.5, we had another serious selling pressure. Serious selling pressure with a big delta. 6,747 lots got traded. So anything more than 2,500 lots in Nifty on a 5-minute candle will be considered as a bigger lot size. So big lots are getting traded, means some big players are coming and dumping they're trying to take some profits out of the system. And that's one of the reason all of a sudden, some people, they will try to exit bigger positions. Market will crash. Such kind of things is what we call as a liquidation in the markets. Typically, these are profit booking in the markets. So look at the big volume also. 652 lots is getting traded. Minus 2417 is the delta. 6747 is the volume over here. Continuously, again, big volumes are getting traded. Repeatedly, big volumes are getting traded over there. Again, what happens? Market some more consolidation. And once again, we are seeing another series of big liquidations. One more big liquidation is getting traded on the downside. Look at that again. A series of big deltas are happening. And this continued till almost end of the day. The price action continued on the downside. So this is how a strong initiative drive typically looks like. Very difficult to fight these kind of days, particularly when big volumes are coming in. Every time the day low is breaking down with big volumes, or every time the fresh highs are made with bigger volumes. So those are signatures of initiative drives. All right. So this is with Nifty. I'll also show you in Bank Nifty also what actually happened. In case of Bank Nifty, last Friday, we had a similar activity, momentum reversal it is, but it is also a trapped seller as well. So trapped seller at the low and trapped buyer was there at the highs. if I could see here, at the day low of the bar, I'm seeing 1398 volume is getting traded on that particular bar. That bar high has been almost touched and it becomes an inside bar. The inside bar is broken at the 1405 candle. So typically I'll be using the VWAP as a potential target. Something like Bank Nifty, right? We'll be using 100 points of target. We can anticipate 100 or 150 points. Depends upon where the VWAP is getting traded. So here the VWAP is getting traded at one of the level. You notice the chocolate brown color line. That is the target levels. That could be one of the potential target. So the target has been getting touched. It took some hour of time to get there, but then that's a decent trading opportunity. It's almost an opportunity of 150 points of opportunity it is. But it started with a trapped buyer. There's some more principles also in play. Momentum reversal was there, but along with the momentum reversal, we also seen a trapped seller is there. Trapped seller. But let me also show you some examples on trapped buyer as well, because last Friday is all about trapped seller. But some places we also get a trapped buyer also. Let's see how the price action happens at the day high. I think the fresh day high, it was hitting with a trapped buyer and genuine seller. Two things are happening over here. Now these are kind of a live labels that I marked during the live session itself. When the price was hitting a fresh highs on the day of 1105, right? 1105, we are hitting a fresh highs. I was noticing I'm marking the high of the bar also, marking the low of the bar also. Look at the absorption volumes over here. So how many absorption volumes you're able to see in this bar? Maybe I'll zoom it. You just count it and then tell me how many absorption bars that you are seeing on the buy side. Remember, any volume which is more than 480 plus lots, 450 plus lots will be considered as an absorption volume. You can type it out. You just simply type it out in the section so that if you participate, you'll get to know whether it's an absorption or not. You just simply count and then tell me how many bars. So let me also parallelly count along with you guys. So 1017, that is number 1, 482, number 2, 610, number 3, 650, number 4, 624. So I think I lost my count. 1, 2, 3, 4, 5, and 6. Total 6 big buyers showed up. Remember, big buyers showed up. But many people's surprise is like, despite the big buying activity, why the market is falling down? Market is falling down because it is an absorption bar. It is hitting a wall of resistance. It is hitting a wall of liquidity. Right? Only if you know the context, only if you know the principle, then only you can decide that yes, this is an absorption bar. How do I know that it's an absorption bar? Because the moment you mark the high and low, immediately next candle itself, it has been broken the lows. So that itself is an entry point. Right? Or you can look for a pullback also. Some traders, they will wait for the pullback, they will wait for the break to happen. Again, price pulls back, and to minimize the risk, they will enter at the pullback levels. So it depends upon some trader, the trading style happens. Some trader, they want to, the moment price crossover, that is my confirmation point, they will enter. Some people, they want to control their risk. So what they will do is like, even if the price breaks, they will wait for some sort of little pullback and they will try to enter at the pullbacks. So their stop loss will be always maintained like some 10-point stop loss or 12-point stop loss. Those kind of very tight stop loss they can maintain around those levels. Right? So Hardik is asking, is it possible to incorporate these order flow strategies to punch trades directly into US brokerage platforms? If yes, I'm interested to incorporate this in my trading. So you can have some button trading controls. You can have a buy sell buttons. With a click of a button, you can send orders to your broker. That is totally possible from there. But still some sort of manual work is there. Automatic, can I do completely automatic if you ask me? At this point in time, I'm not very sure how many people are doing that. It's still possible, but unless the order flow is available at open source, but most of the order flow tools are like closed tools. So automation is, I think more or less it is difficult only when using, but most of the people they use in a manual way only. Manual way, you have to judge it, you have to do a lot of judgments. So visual judgment you have to take, and then you can punch orders. But you can build some buy sell buttons and you can pass orders from Ninja Trader. That is totally possible. Alright, so what could be the target? The target should be the VWAP levels. So where is the VWAP level if you ask me? The VWAP level is over here. It is coming and exactly touching the VWAP level. It is also crossing also. But before crossing, it touched immediately. Hardly it took some 25 minutes to come back to those levels, right? 1135 levels. So it provides a very tighter risk management and also reasonable risk reward ratio. So typically you will be finding mostly in a calm market, you'll be finding 1:1 risk reward ratio. Some cases you'll be finding like 1:1.5. And there are certain places when markets are behaving very violently, the risk reward ratio will go like 1:2, 1:5, even 1:10. Sometimes even 1:20, 1:25 kind of risk reward ratio also happen. Depends upon how much volatile the market is. So here I'm not only saying like it is a trapped buyer. So this particular bar, I'm not only saying like trapped buyer. Of course, it is an absorption bar. I'm not only saying that it's a trapped buyer. I'm also saying like genuine seller is also there. At the fresh day high, you can see that on the sell side, I'm also seeing a big volume of 464 lots. This 464 lots is happening on the sell side. Now these sellers, which is happening on an absorption bar, then they are called as a smart sellers or genuine sellers. I given the term like genuine sellers. And such kind of bars have a 60% odds. Remember 60% odds that it could become a top for the day. It could become a top for the day. That's how the powerful that particular importance of the bar is. Okay. So maybe if you are just looking into a trapped buyer or a trapped seller, it may be a day high or it may be a day low. But if along with that, if you are seeing a genuine buyer at the day low or genuine high, a genuine seller at the day high, it should, the only criteria is like it should be an absorption bar. Absorption bar along with the genuine buyer should be a day low. An absorption bar with a genuine seller, that is what it happened on last Friday. That is how Bank Nifty topped out with a greater odds. Maybe if you know this information, probably you could have taken the decision pretty much better. Maybe you can even extend it for a slightly extended downside targets also. Or you can also derive targets. If you know market profile, you can easily derive the slightly and extended targets. If you practice only market profile, yes, VWAP is the straight away first target that we'll be practicing is towards the VWAP levels. All right, I'm sure now you might have a pretty good idea about what is a trapped buyer is all about, what is a genuine buyer, genuine seller is all about. I'm sure you might have a pretty good idea. Here is again a textbook style example for a trapped seller. On the sell side, we are seeing a 643 lots of activity, right? And then market does a pullback. Immediately the high of the bar is getting taken out, the very next bar itself, and that confirms the absorption bar. Right, again, there are a couple of places you can put a big trade filters also. Last time I think I showed you the big trade filters. You can use the filtering mechanism. You can enable the filter and you can punch bigger orders. It will show only the bigger orders only. So that way you'll be able to track where the bigger order flow is getting formed. Only where the bigger order is getting formed, only those levels will be highlighted. Rest of the levels will be highlighted with zeros. All right, I guess more or less we came to the end of the session. So today we learned about two important principles. In fact, three: initiative drive, absorption, and consolidation. We also learned about two more interesting principles called trapped buyer, trapped seller on an absorption bar. And particularly when an absorption bar is combined with genuine buyer or a genuine seller, the odds of market topping out from an intraday perspective is slightly on the higher side. 60% is a reasonable probability to consider. All right. So let me know if you have any questions. I'm happy to answer your questions here. So Vishal Agarwal is asking how to identify genuine seller or a buyer. I mean, on candle, they look all same. See, in a candle, you cannot identify. Only using order flow charts only you can identify. At a day high, if you are seeing big sellers are there on the opposite side, and it is the low of the candles breaking down, it is a genuine seller. Whereas if the fresh day low is met, same candle at the fresh day low, you are seeing a big buying activity happening where volume is more than 450 plus lots in Nifty or Bank Nifty, and that particular bar is immediately broken on the upper side. The bar high is broken on the upper side, or it's becoming like an inside bar. The inside bar is getting taken out. That becomes the genuine buying on the fresh day low candle. So what is the outlook for coming week? So basically next week we are having a truncated session. Most likely holiday season is going to start. FIs are going to go for a holiday. Most likely institutions will be on a very long holidays. So probably sentiments in the market has been turned a little bit negative. So sideways to downside market is what I'll be anticipating. Not much of a big sideways market, a big downside market, but mild corrections maybe towards something like Nifty 21,060. I think that is a level that I've been watching out for on the downside. Upside, more or less, I think maybe we may not be making an all-time high. One more all-time high may not be made in this week. Maybe last week low would be taken down. That is what I'm just considering here. Because the one-time framing has been happening for almost 8th week. Market got into balance last week after a strong run-up. So I think some mild corrections is what we can anticipate. And no more news is there. There is no event is nearing by. No, all the Fed announcement is over. RBI announcement is over. Election results are over. So markets are moving towards holiday. So maybe market might be taking some rest over here. So Kapil is asking a very interesting question. After the inside bar, if the next candle breaks the high and low, then how do we consider? So when it is breaking the high and low, if it becomes another trapped buyer, then maybe one more trading entry would have been happening in that bar. If price keep on breaking on the upper side, closing on the upper side, it's a stop hit. Either way, it's a stop hit. All right. So let me stop the session here. I say thank you for coming by, attending the session and asking so many questions. Have a wonderful Sunday. Thank you once again.